the market seems to be in a confusion where it's headed. But the long term perspective still remains the same. But yes, I agree. When you look at this 15x of price action, the most likely questions remain: is the fundamentals supporting what you are going to say? Is the current affairs supporting what you are looking at? A lot of questions come, and that's when you go look at the current affairs, what the market is showing you. You look at news and it's like, okay, some of them looks positive. If you do understand that it looks positive, okay, you go to different government websites, you try to look through what they are kind of coming up with, and you see like, okay, that's positive, but it's not all positive, right? This one, which came from World Economic Forum a couple of days back, had this idea, right? Change the code of Bitcoin, which is going to be good for its environmental impact. Now, why am I reiterating that? Because today from Bloomberg, you got this one talking towards the green climate sustainability, that narrative. It's like, okay, crypto minus electricity use in Texas would equal another Houston. Okay, that's not small deal. So when they say, okay, we are all working on sustainable sources, the news, the reality is coming on a different narrative. Now, when we go back to this World Economic Forum stuff, you are like, okay, this is recent, like just 2 days back. But what happened a month before that? If you look at this, you are like, okay, Chris Larsen started a campaign showing, okay, let's change the core of Bitcoin in a way that it's eliminating the carbon footprint or the environmental footprint, which gives more reliability to the project, more reliability for crypto as a whole. But when you look at this and you change the narrative to something else, you need to understand, okay, this is the background. It all started like this, and then it's now highlighted by the World Economic Forum. So yes, the conspiracy of Ripple, World Economic Forum and others are being reinforced, but as an investor in sustainable stuff and technology, which gives a lot of advantage, we are like, okay, these narratives are going in a way, because now we are looking at what they are eyeing on: ESG, tech, finance. So you are looking for the near future goals of 2030 agenda. If you are familiar with UN 2030 agenda, you will know what we are taking you through. But now the question is like, okay, for example, what am I looking at? Okay, is this real? Is this new? And you're like, okay, we see people moving out of XRP, but these suggest like, okay, people are moving back in. Is that really possible? News and narratives recently is actually really good if you are observing what it really means it's happening, because they are now operating like, okay, we already lost the case. Now that's not bearish. Don't judge they, because they are like, okay, if US is slow, it's fine. We're gonna go heavily in other markets. But in between, if you get a clarity in US, that's gonna change the entire scenario. Now, come back here. Technically, you're like, okay, we had a consolidation. Now, this is not XRP, this is XLM. I'm using this as an example to show you how TA works. Our price action gives you the idea, right? We're gonna look at like how it works first and answer some of the important questions, like, okay, we've consolidated long, then we bursted 30-40x, we corrected back 80-90%. Do we really go up that much? Do you really think this pattern is going to play out? Do you really think that this is going to match up here? Do you think that? Do you really think about that? And if you are confused, if you are doubtful, don't worry. We're going to go through this. We're going to detail about this. That's why, welcome to the Scientific Investor family, where we discuss crypto and science behind investing regularly. You look at the market and you look at the history to understand what's happening there. And it gives you that idea. Okay, fine. We've consolidated like 1,000 days. That's not small stuff. I can agree. Majority would have been like, okay, this is not going up, I'm moving out, blah, blah, blah. And they moved out. Then what happens? Say if you're moving out here and buying back here, you are that one lucky guy. Or if you're moving out here a little bit, moving into other assets, then, making a lot more purchasing power and buying this asset back somewhere here, again, you are lucky. But timing the market is going to be super hard, right? So you look at this. Okay, you went up, then you came back down. What happened? You got that rounded bottom pattern, which happens to be like 8x after this 40x. Now you go look at what the price did. It did way higher than that. You look at the price. It did way higher than that. Why is that? Because whenever the price goes up, the euphoric action in the market is too much. It will go above that. So if you have a measured target, start taking your profit by that region. Because you may go a little bit higher than that, but the drop would be immediate. And it'll be really hard for you psychologically, emotionally, to stay in the market after that. Now, that's what happened back in 2017, 2018. Now you go look at the market during this extended corrective bear market and you look at the pattern. So if I'm observing this correctly, we are like, okay, this pattern shows you we have a long way to the upside, right? You have this pattern, and if you're going to go up, that's going to burst through the upside. Now, another question here would be like, okay, it's just 8x. No, it's not. If you understood this correctly and you're buying in here at the bottom or say close to the bottom and compare it with the last one, it happened like 120x. The first one was 40. It was big. 40x is not small. Followed by that, you got 120x. That's 3 times the last wave. So now you come here and you're like, okay, so 3 times. You go here and you're like, okay, wave 1 is starting from here, not from the bottom. Okay, so you got 10x. So what if we are staying conservative, say 3x? You put that number here and you're like, okay, $16, somewhere close to that. Fine. But what about 32? It is the pattern target. It can be in wave 2, it can be in wave 3, but it's still your target. But the difference is you look at the total time horizon. Now that is the hardest part, because if you measure this total structure here, now we haven't broken higher, assuming that we will be breaking higher within June, July, that's 1,600 days, and 30 to 50% of that would be needed to reach the target. So that's like, okay, that's a year? That's going to be hard. But again, the market does play these out. We have shown through different charts. You can go to NAME, you can go to CA coin, you can go to a lot of different assets in this market, which actually shows you something like this. Okay, the worst case possibility, the best case possibility. You go zoom out and you're like, okay, there's a ton of stuff happening in this market right now. And it's not just 2 or 3 assets showing you this possibility. There's a group of assets showing you we are gonna do this. This is the same pattern we have. Some of them are showing you 40-50x in that measured move. So it's like, okay, the measured move is there, your cup and handle is here. Why is that important? You go look at the history. You can look at all the different patterns available in the market, all the different variations, because this is market, different asset class with different human beings. So the pattern would have slight differences, but the outcome looks almost similar in all the different markets, right? Whenever you break to the upside, you get that movement. So your measured move comes out as your target. So look at this. You have this as your measured move, and then you reach your target. Fine, great. That's not actually bad. Now the trend actually continues and you go higher, but if you're taking profit with that, it's fine. So what you're looking at is somewhat similar pattern here in this one. Now, understand this. This is not crypto, which we are looking at here. It's different stocks in different area, right? Different human beings trading that. But the pattern happens to be similar. So can XRP go to $30? Yes, I do believe it's going to go there or even higher. But what time frame? No one knows. That's why we use to look at the range of wave structure. And you have support. Yeah, you'll have to come to the support. Most likely you'll bounce from this support. You'll have to break through the resistance and moving average. That's the short-term scenario. But you look at Bitcoin, then you get a little bit more idea, right? When you're looking at the Bitcoin and then comparing it with the XRP zoomed in, you're like, okay, 0.6 can be that support range. Or you look at Ether, okay, we broke to the downside. We're going back to retest. If that retest fails, we are going to come back lower. Now, you step back and you're like, okay, they sway the previous support. If I'm to come back lower, how much low do you think we can come down? Now, we don't know, it can even go to 0, but 10% more is likely. In my thought process, I'm like, okay, if that's what's happening, you're going to come back to this support before you actually bounce. Because now when you take that total correction from the top till this point, you're not actually going to this range, you're not actually going to this range. That main correction or your bottom is already in, which is a great step for all of us in general. But here, if you look at Bitcoin, your bottom was here, 29,000. So right now when you're doing this, even if you are dropping to this one, now it goes same as Ether. You broke below, you're going to retest that one. If you are able to break through this, you have a couple of resistance, and then the moving average acting as a resistance. Yes, that sounds, I know, yeah, a little bit crazy, but you do have that. First 33, 37, that range here, and then you have a massive support at 29. But most likely, 35 range is gonna hold. Because I've explained this before, right? You go on to a monthly chart of Bitcoin and you observe like, okay, $35,000 in price action was strong for monthly close, and next open which pushed it higher. And then the next time the price went to that level on a monthly, you got buyers, and buyers pushed the price back up. So most likely Bitcoin is going to hold 35,000. Now, with each bounce in Bitcoin, you're seeing a lot of small cap coins doing great, right? They are holding, they are moving up. You know, you are making a little bit money here and there while it's going down, your purchasing power. And when Bitcoin bounce, you're getting these small coins running. Now, one of my biggest question here would be, do you really think this is a bear market? Because I'm still like, okay, I've seen a lot of people giving you guys that narrative saying this is a bear market, guys, this is a bear market. Okay, fine. You know, we respect each and everyone's opinion. Now, I really want to show you something and ask you whether you think that this is a bear market. So what are you going to do? Okay, you take Ether into the same chart. Fine. Now, what you do is, okay, you want to actually compare that with Bitcoin. Ether is a large cap altcoin. Great. So you move that into a new pane, you put that into log scale, you put this into log scale, so both of them log scale. Fine, great. Now you want to add a medium cap coin or a small cap coin into this equation. So fine, you go to NEM. If you want to add that one here, you're adding NEM here. Fine. Once NEM is here, you're taking that into a new pane. Fine. You're going to put that back into log scale. So all of them looks similar. All of them looks similar. Fine. So now you have Bitcoin, a large cap, a medium cap. Then you want to look at a small cap. Fine. You can go look at a small cap like Loom. We were discussing this, you know, in a one-on-one session recently. And, you know, this is so clear for me, like, okay, what I personally understand from this is so easy. The narrative is never bearish for me. Because if I'm looking at this, okay, you kind of go into the market in a way that you are looking at what's happening with this market. And you kind of get that easy narrative. When all coins go up, you kind of get, okay, medium to small cap going up all together. Large cap, it's a little bit slow, it's a little bit slow. Even when these are dropping because they went up too high, too soon, it actually drops. But this one, the drop is comparatively smaller. So that's not bad. Now, look at that same with a comparison of Bitcoin. Now, that's monthly. To get more clarity, reduce noise, you know, for us, we are looking at a weekly. In that weekly, you are getting the same narrative. You are going up, all together. Now, we are slowly coming back in the corrective mode. Now, the key point here is, if you think this is a bear market, these coins shouldn't be popping like this. You shouldn't be getting green numbers like this. Now, that's not just on a daily frame, right? You go look at weekly and you're still like, okay, there are coins which are doing really good. There are coins doing 20, 40, 50, 100% a week. which doesn't actually look like a bear market for someone with common sense, right? If you have that cognitive ability, you're just looking at these and you're asking the question, if everything goes up together and everything goes down together, when some of them are actually going up, is this really a bear market? No, that's how it usually happens. Micro cap, small cap, medium cap, large cap, the money actually trickles in through all of these. But yes, you need to get a confirmation in BDC that it's breaking through the resistance and starting to run higher. Before that, there's going to be carnage in the market. Believe me, there's going to be a carnage in the market where a lot of people are going to have pain. That can be short term, it can be medium term, no one knows. But I personally think in a month, we are going to have that carnage. And with that, we are going to cleanse the market. A lot of, holders who are like, I'm holding this, but if Bitcoin drops below 35, I'm out. If it goes to 33, I'm out. I'm like, If you're aiming for 90,000, 40 to 90 is actually good, not bad. But 30 to 90 is even better in my eyes, right? So if you are a Bitcoin bull, the way you should be looking at the market, it's not like, okay, it's the opposite. You need to look at an asset when the price is down, close to a support. Now, the other way which you can look at this is simple way. Now, normal stats, right? You look at the Bitcoin from its moving average to the downside. 50% down, you go back up. Great. Then in a bear market, remember, in a bear market, here it's 50%. So in a bull market, the correction is 48%. Bear market, it's 55%. Close to that. Fine. Now, you're no way close to that right now. You have to understand that. Here, it's just 17%. The recent dip here, if you put that into perspective to the top, it's 32%. So can you really drop to this range and say we are going to continue higher? No, there is still a possibility you may drop. But we don't really bet on that. Why? Because you also look at the people who are entering right now. Because supply and demand really matters, right? So when you see the Luna guys or Michael Saylor now, it's really, don't even take that name, because if he's selling on the back end, it doesn't make much sense. So yeah, other institutions, when they are buying Bitcoin heavily, I don't really think if they're buying at 45, when the price dropped to 40, they'll dollar cost average, they'll buy more. If it's dropping to 38, they'll buy more. If it's dropping to 35, they're going to buy a ton, right? So I don't really think the mining and the supply is going to go above these buying power. So that really makes sense. Even if it's dropping, it's going to go back up. Because look at the inflation. Now I've seen comments like, okay, dollar is strong. What do you mean by purchasing power is going down? Dollar is up 5%. Inflation is up 8% for this month. Dollar is up 5% in a year, and inflation is up in that 1 month. So you take 1 year, dollar increase is nowhere near your inflation. Zoom in and look. Fine, you're like that horse. You can't see what's happening beyond you. Just zoom out and look at what's happening in the macro scenario. Because if you are investing on the trend, you are investing on the trend. It's trending to the upside. You don't want to go against the trend. Now, you can use a 100-day moving average. You can use a 200-day moving average. It's all up to you. But stay focused. You shouldn't be going the other side of this. You should be focused with your portfolio. And that's one of the reasons why we try to go through all this, right? Guys, if you are receiving value for your time, please do hit that like and subscribe button. And remember one thing. You look at these charts, and if you have similar assets and you're confused whether the assets in your portfolio has this pattern, because there's not one or two assets, there's a group of assets showing similar pattern, a little bit, some like 25x, some 30-40x. If you have them, great. Follow them, create your targets, exits, be strong on that. And if you want to know those, you can look at the Patreon. The link is given in the description below. If you have it in your portfolio, that's great. If you don't, if you want to rebalance, you get all that there. So guys, I'll meet you on the next video. Bye for now.